Morning, good afternoon. So we've had the US CPI data, which was supposed to give us potentially a bit of warning about what the Fed might do tomorrow. Actually, CPI cooled off a bit, but core CPI is still really sticky. It was forecast to be 5.2, came in at 5.3. That's still quite high. It's not down. Now, I think that the Fed will still pause because they've told everyone that they might. And the market is expecting that, and they don't like to surprise the market. The problem is that I think they're still going to have to hike down the road another 25 if not 50 basis points, and whilst stocks are red hot, which stocks are red hot, the Fed have got room to do that. They've also got room to warn about it. So I think that we might pause tomorrow, but we might hear quite a hawkish statement about how they haven't stopped. There might be another one. There's still another one to come. So that's where we are. Technically, I'm really interested in this level that we got to in the dollar index. This is a daily chart of the dollar index. Here from this low, we're in this sideways range, right? We had this lovely February to March rally, and we're inside of this sideways range, and we're expecting a big ABC equal measured move, aren't we? So here's our first swing, second swing, third swing. If this is just going to be a kind of three waves and then higher to the equal measured move level and back to the 200 moving average up here, this kind of is the ideal place to do it from. If I look on the 4 hour, and this is why I'm quite interested in, we might see a reversal in the dollar tomorrow, depending on the Fed comments or what they do. Because if we measure this first high to low here, you can see that what we've done is another equal move and down in 5 waves. So that means that we have got room to bounce here. And we've got a similar pattern for one more push higher. If I put the measured moves on, confirmation is going to be back above the 61.8 level here. That would be our bullish confirmation, 103.58. So far, it's looking like quite a nice bullish candle. It's an important level. And so we can say at the end of this week, if we get above here, we will see one more move higher. That will mean one more swing lower in most FX pairs. Will mean one more swing lower in, unfortunately, metals, commodities priced in dollars and so on. So a day ahead of the Fed, no coincidence, we've reached our ideal support level for one more push higher in the dollar. If we take a look at the euro, which is of course the opposite, or it's 57% of the dollar index. If I put this chart on like this, you can see if I measure from this low to high here, project it from this low here, we're also at the equal measured move level. That's where we closed last night. And today's a little bit of a bearish reversal candle. There is a little bit more room in this euro to go one more swing higher to get to the 4 hour 200 moving average. And if we look at where our daily moving averages are, we're not yet back to that 50%, are we? But it is kind of important, whenever you've got that ABC pattern, it could turn into a bigger reversal. So in the euro, we would see another swing lower underneath 1.075. That's going to be key support, and that's where I'm looking for. And this pullback today, if the Fed say anything sort of hawkish or anything bullish about the US dollar, if this breaks down, I think we are likely to see another swing lower. So important levels in FX. If we take a look at some of our other favorite currencies, this is a daily chart of the pound dollar. You can see we've got a very similar thing going on, 786 fib, which is a Gartley. And this first swing was to the 61.8 pullback. Second swing to a 786. That is a textbook bearish Gartley. And if you measure the swings, so from this high to low, this is also at 126, the equal measured move. So this is a textbook Gartley reversal pattern for another swing lower, a harmonic pattern at 126 in the pound. So are we likely to reverse here? So far it just looks like a swing failure pattern. And you know, we have to, first off, 236 of this swing underneath these hourly moving averages, and then underneath this low for a double top. And because this is a 786, you know, we would have a first target here and a second target down here. But potentially a classic textbook bearish Gartley pattern in the pound dollar. Let's take a look at the Aussie, see if that's at resistance. This is quite correlated to stock indexes, so it's likely to be stronger whilst indexes are strong. And we had a target in this, remember, this 50% level in the middle and these previous highs, and we're at it. We could see a bigger pullback here in the Aussie before we continue higher. I don't see any reason why this Aussie, if stock stays strong, doesn't continue higher to 0.705. But here in the middle, this is pretty important resistance, and we could see a little bit of wobble over the next few days. Remember, we've got the Fed tomorrow, but right after, on Thursday, we've got the ECB, and that can, you know, if the ECB are really wimpish and the Fed are really hawkish, we could see another big swing higher in the dollar. If the ECB say, okay, we've hiked and now we're going to pause for a bit, that, you know, we could give us the reversal that we're talking about. So that's what I'm watching for in currencies. Now, obviously, crypto has decoupled a little bit. Gold, however, has been pretty sensitive. And if we were to see, remember, I think we potentially are doing 1, 2, 3, 4, and one more push lower in gold. And if we go out to the weekly, you can look at this fib level that I'm looking at, and this previous highs at 1920. I don't know if we'll go down there at the moment. We're like holding this weekly moving average pretty nicely. But one more push lower to finish here in gold would see 1920. If we see one more push higher in the dollar. If not, we'll just go sideways in this range. At the moment, there's room to do that. Look, we've had one push correction. We could easily do another one before we go lower. It's kind of all gone flat ahead of the Fed. Okay, stock indexes, bullish, bullish, bullish by the dip. Big picture for the S&P and why I think we've got further to go in this rally. So I think that we went one three-wave correction here in the middle, sideways at this moving average. We had a sideways range going on here whilst we did this three-wave correction here in the middle, and we've broken out from it. So we've got, again, measured move targets, and if we measure this first swing, put it from the bottom of the correction where we went ABC, that also gives us that 786 target here in stock indexes at between 45.17 and 45.28. That's a bearish level. If we reverse that, this whole rally would be corrective, which it would look like we would come back initially to 4,000, which is where the daily 200 moving average is. Then I would expect a bounce, and then I would expect another swing lower. Let's see what happens. You know, so far so good, holding up pretty well. You know, seasonally, the year before an election is not a bearish year. We've had a pretty good year off these lows. This is with the start of the year here, you know, doing pretty well. But it's the season where if we're going to get a bit of a pullback, and potentially we could see that. But for now, we are at 4,400, and there is no resistance until 4,500 and change. So we're still in buy dip mood whilst we do this final push higher. Okay, I'm just going to take a quick look at NASDAQ because these stocks have been crazy ahead of the open. And let's talk about here on the hourly, the bearish divergence we've got. Okay, so I've got the RSI on here. You can see we got pretty overbought, sorry. Overbought in itself is not an indication to sell. You need a topping pattern. You need a double top, bearish reversal, something like that. We're coming back off it. This is divergence when the indicator's making lows and this is making higher highs. At some point, this is going to run out of steam. If we use our fib levels for targets here in the NASDAQ, our next 786, just like the S&P, is 15,423 in the NASDAQ. So more upside. We're in between these levels. We are at potentially a wobble level because we've got these previous highs and lows here. Look. Now, this was a previous swing. Was it meaningful? I don't think it will be. You know, potentially we could squeak a little bit higher. And so I do expect another correction before we get up to that 786 fib level. But we are definitely still in buy the dip mode, expecting this trend to continue in stock indexes for now. Okay, I hope that was useful. I will do crypto later. Please send me any requests you've got. I will take a look at Litecoin, Ripple, all the favorites. You know, with everything else rallying, we would like to see a breakout. Didn't happen today in Ripple. I've been watching it in Bitcoin. You know, had a pretty nice run up in volatility, and here we are all the way back down again. Look, here's the hourly move that we saw around this CPI. This is what I mean about volatility. It's really tough, but very tough, isn't it? It's underperforming. Can't wait till that flips and Bitcoin is outperforming again. Okay, good luck. Speak soon.